Right. Hi. We're going to discuss about the Indian banking system and the overview of the banking system in India. At first, let's elaborate on how the Indian banking system is divided into. First is commercial banks. Second is post office savings bank. Third is industrial agencies of rural finance. Fourth is specialized agencies of industrial finance. Fifth is Reserve Bank of India, and sixth is other non-banking financial institutions. First, we have Indian commercial banks coming under commercial banks, that is Canara Bank and Bank of Baroda, etc., etc. Then we have the SBI and its associates like State Bank of Mysore, State Bank of Travancore, etc. Then we have foreign banks and merchant banks. Then under industrial agencies of rural finance, we have cooperative banks, which we're going to elaborate on later. We have under specialized agencies of industrial finance, we have the IFCI, that's the Industrial Financial Corporation of India, the Industrial Credit and Investment Corporation of India, Industrial Reconstruction Corporation of India, Industrial Development Bank of India, the State Financial Corporation, and the State Industrial Development Corporation. And under non-banking financial institutions, we have LIC, that's the Life Insurance Corporation of India, the GIC, that's the General Insurance Corporation of India, the Unit Trust of India, that's the UTI, and the Export-Import Bank of India, that's EXIM. Now we're going to discuss about cooperative banks. Cooperative banks were established in 1904 under the Cooperative Credit Societies Act of India. The objective of cooperative banks is to provide loans at a lower rate of interest. The definition of cooperative banks is a voluntary association of members for promotion of economic interests. Cooperative banks are divided into two, non-agricultural and agricultural. Under agricultural, we have long-term credit society and short-term credit societies, which can further be subdivided into the primary cooperative bank, the central cooperative bank, and the state cooperative banks. Under primary cooperative bank, it's basically more than 10 villages dealing directly with the individual borrowers. They grant loans, they indulge in distribution and marketing functions, etc. The problems which the primary cooperative bank faced were erosion of its own funds, deposits, and low recovery rates. To overcome this problem, NABARD extended full support for the development of primary cooperative banks, or PAC. Here, every member has unlimited liability, so which is quite kind of a disadvantage. Then their loans given on personal guarantee, supported by the personal guarantee of a member, and on mortgage of land and buildings, etc. Dividends are used in the development of villages, such as new facilities for electricity, new pavements, roads, etc. The main concern of primary cooperative banks was that it was unable to fill or unable to meet the farmers' needs, and this increased in a lot of overdues. Next is the Central Cooperative Bank. Central Cooperative Bank was formed to refinance the primary cooperative banks, as it did not fulfill the needs of the farmers. It lends to primary cooperative banks, and it is an intermediary between the state cooperative bank and the primary cooperative banks. It's located in every district headquarters, that's every major city or town in a in a district. Next is the state cooperative bank. Here, the state cooperative bank is an intermediary between the RBI, the central cooperative bank, and the primary cooperative banks. It controls and coordinates activities of all the central cooperative banks, and it's an apex bank of cooperative societies in each state. The management of the state cooperative bank is under the shareholders, assisted by the board of directors. Next, we're going to get into the regional rural banks. Regional rural banks combines cooperative societies and business organizations. It has abilities of commercial banks as well. It has privileges of a normal company where it has separate legal entity. It has perpetual succession. That means whether the owners of the company or the members of the company exist or not, the company does not cease to exist upon the death or the retirement of the owners or the members. Then it has a common seal. Well, its primary focus or primary objective was to develop the rural economy by providing credit facilities for the development of agriculture, trade, commerce, industry, etc. Central government owns 50% of the regional rural banks, whereas state government owns 15% and sponsor bank owns 35%. The authorized capital is rupees 1 crore and it is divided into 1 lakh shares of rupees 100 each. Issued and paid up capital is 25 lakhs each. The CRR is 3% and the SLR, that's the statutory ratio, is 25% of the authorized capital. The management is as under: 9 board of directors, a chairman by the sponsor bank, 3 directors by the central government. The privileges which the regional rural banks have is that it can borrow loans from sponsor banks at lower rates. It provides assistance by it gets assistance from the sponsor banks in the first 5 years of its existence, and there are no tax applicable on profits and gains. The problems which the regional rural bank faced was increased in corporate cost of operation, lack of supervision, quality of lending and follow-up, and also a major problem was bad loan recovery, as the farmers were not in a position to pay back the loan due to various reasons such as natural calamities, etc. etc. Alright, this is it about the Indian financial system and the overview of the Indian banking system under cooperative banks. Thank you.